You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. Welcome back, Brandon. How you doing in cold Canberra over there? I'm sure it's freezing.
It's very chilly, man.
Yeah.
Because I ride into work these days. I used to catch a tram, but these days I've just been riding my bicycle, get a bit of exercise in, and I actually had to. Normally I ride quite quickly because I'm just commuting. I just try and get from A to B. Today I had to physically cycle slower to avoid the freeze, to avoid that wind chill, to avoid how cold that was. So, look, it's. I don't know. I don't know if it's the same for you, but over the last week or so, it's really just been summer's over, boys.
Yeah, I'm sure it's
this is winter.
Yeah, I'm sure it's not as bad as Canberra here, but it has been freezing. Certainly a change of pace over even a couple of weeks ago. I feel like it was a couple of weeks ago we weren't in Australia, so I guess
that's true. Man,
I guess
take me back.
I know. We went from 35, 40 degrees in Texas and in Florida to whatever it is here now, 12, 14 degrees. The next week looks pretty grim as well. So unfortunate.
Yeah, I've got 11, 11, 10, 9, 7, 7, 9, 9. Okay. That's my next 7 days.
I think ours is 12 to 14, so a little bit better, but...
Yeah, but not by much.
It's not
Still
great.
Chilly. Yeah, Melbourne's really quite chilly as well.
It does. It gets pretty cold. Yeah.
Yeah.
I do envy the people living in Queensland or in or at the top of Australia somewhere in Darwin or something.
Yeah, so good. Let's have a look. I want to have a look.
It's always
Brisbane
35.
forecast.
Oh, maybe not in Brisbane. I'm not sure, but
no. Oh, yeah. I don't know. Let's have a look at Cairns then.
Yeah, look at
Cairns is hot. It's way up there. Oh my.
What was it, 35 or something?
No, it's 27, 28,
okay.
28, 28, 28, 28, 26, 24. Oh my gosh, that looks nice.
Yeah, we just need to set up an office in the top of Australia. I've been saying this for so long that I just want to, every 6 months of the year, or at least for 3 months of the year, just move somewhere else and just avoid the worst of winter.
Cairns is pretty high up. I think if you get to, hang on, let me have. If you get to Brisbane, you're halfway there.
Yeah.
Yeah.
Right.
So if you drove to Brisbane from Melbourne, you're halfway there to get to Cairns. It actually blows my mind. I need to look at Australia's geography more, but Brisbane's only halfway up Australia.
It's not that high up. Yeah, it's quite low in Queensland, right? So yeah. Yeah. Makes sense.
Wow.
Yeah, you have to go up to Cairns or Port Douglas up there. Something right up the top.
Townsville. Yeah. What's up the very top?
I don't know.
Oh, that's where Thursday Island is. There you go.
Thursday Island. Wow, there you go. It's a sign. We do the podcast on a Thursday. It's a sign.
Yeah. we need to go to the islands. There you go. Anyway, sorry, I'm getting well distracted now.
Yeah, no. Yeah, it's right. The other terrible thing is as well, this office has the sun rises through a window just on the other side of this, so it gets really hot in here. So I actually have the air conditioner on, meaning after we do this podcast, I'm going to go outside to the rest of my house and it's going to be icy cold, but I have to because of the light and it gets really stuffy in here, which is
although honestly, that's kind of nice that it's kind of nice that you do have a room where it's if you are freezing cold, you can just quickly retreat to that room and just warm up.
Yeah, it's a good office. It is a good office for winter because it stays quite warm. Terrible office for summer because it turns into a sauna. But we've actually got some fairly interesting, unique stories this week. Nothing kind of major globally, I think, happened, although I have one story out of Jamie Dimon's opinion about where the kind of global economy is going. We've got a story out of Meta. I've got an interesting story about the streaming giants having a go at getting AFL streaming rights. And
right, that's interesting. Yeah. I haven't heard about that. I'm interested in that because I've not heard that so far. And then I'm going to talk about Elon Musk talking about returning to work at the office. He's got some interesting policies there. And there was also a guy that got charged with insider trading on NFTs, which is interesting as well. So we'll go through that as well.
Wow, there you go.
Right. Take it away, Andy.
This episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can basically bring in all of your trades either automatically by connecting your broker, or you can use Excel or add them just manually one by one. And once you do that, it will basically allow you to track all of the holdings in your portfolio. So your capital gains, dividends, dividend reinvestment plans. It will do all those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. Then you can also use it for when it comes to tax time, which is almost upon us here in Australia and in New Zealand. Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, diversity, that sort of thing, unrealized gains, as well as used at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. Head over there, track up to 10 holdings for as long as you want, or you can also use that link to get 4 months off a yearly subscription if you sign up to a premium plan to get access to all of those reportings.
Cool.
Where should we?
Can we talk about this AFL stuff?
Yeah,
because I'm actually super interested by that.
Yeah, this is it's kind of a clash of the legacy media companies in Australia clashing with some of the new streaming giants, or particularly the streaming giants in the US, and ties into some laws around broadcast rights that I was not aware of, which is really interesting to kind of learn about. But essentially, Seven West Media, which is one of our big broadcast media networks here in Australia, they have their free-to-air channel, Channel 7, and their kind of associated channels. They're in a battle with some US streaming giants over the rights to the AFL. So just to give a bit of a background on kind of the law around this issue first. Essentially in Australia, we have something called anti-siphoning laws. And this basically means that there's a list of sporting events that the government thinks should be available on free-to-air TV. So they've got this kind of protected list of sports that the government says, hey, you should be able to watch these for free. And as a result,
it's kind of part of like the Australian culture almost.
Exactly. Like,
because it is sport is a big part of Australian culture, I would say.
Yes.
So
massive.
So the government's kind of just saying, no, these events, we want everyone to be able to watch them no matter what. I guess. Yeah. I'd guess like, I don't know, the Australian Open or like the Melbourne Cup or something like that. Maybe the Boxing Day Test match or something like that. Yeah.
So just to give you a couple on the list, so AFL's on the list, rugby league and union, cricket, the tennis, soccer, the Olympics, Commonwealth Games. Oh, okay. And then it goes on to other things like the Formula One as well, and the horse racing as well. Also, just as a category, horse racing is also there as well. This list doesn't mean that they have to be free to wear, but what the law means is that it gives free to wear TV networks the first choice in bidding for these events. Okay. So basically, all of the pay TV like Foxtel in Australia, they have to kind of sit back and give 7 and Channel 9 and Channel 10, which are kind of the major free-to-air broadcasts here in Australia, and I guess ABC and SBS, and give them kind of the choice of bidding with AFL or whoever first, and then only if the free-to-air network doesn't decide to buy the rights to certain games or to certain events, then pay TV can come in and bid. And that's exactly why, take the AFL, for example, not every AFL game is available on free-to-air TV. There's kind of the major ones that you would expect. And then kind of anything outside of that is on Foxtel. That's kind of the background of the laws around this. The issue today...
That's super interesting.
It is interesting. And look...
I didn't know that existed.
Yeah, I had no idea either, but it kind of makes sense because you would imagine something like Foxtel, which is a pay TV provider, would probably have, I don't know, I guess I would have assumed they'd have more money to bid. So they probably could potentially win the entire AFL rights. And that makes sense why AFL has always been, and these other things are always free to air. Even the Formula One was broadcast on Channel 7, I think.
Right.
So yeah,
but it does make sense because even there are some like massive media companies in America that could absolutely they could acquire 1,000 Seven West medias if they wanted to, you know.
That's
So they would just have the resources to be like, all these Australian sports, we got them now, boys.
Yeah.
So yeah.
Well, I mean, yeah, absolutely. So the issue kind of today is that the anti-siphoning laws only apply to pay TV providers, which technically means there's a loophole at the moment where streaming services, even though it would be a paid service, could bid for games at the same time as the free-to-air TV networks, because the law only applies to television networks. So there's technically this loophole that exists where streaming services are not bound by the law, so they could bid as early as the free-to-air TV networks. And on that, there's actually a number of streaming services that are trying to get the rights to the AFL in 2024, which is next when the contract kind of opens up again. Amazon Prime is trying to bid for it, Paramount, and even YouTube is throwing their hat in the ring for AFL rights, which is fascinating because this is a huge shift in just this is never something that's kind of for a very long time. The AFL, for example, has very much been free to air on Channel 7 and Foxtel gets the scraps. That's pretty much all it's been, and there's never been really any other kind of consideration. So it's very interesting. Amazon in particular, I think the head of content had a meeting with the head in relation to this topic of the AFL just a couple of weeks ago. So they're having discussions at the moment to try and get not just the scraps, but the entire rights to AFL games, which is pretty interesting, if you ask me. Seven West Media boss James Warburton made a speech at the Committee for Economic Development in Australia, pleading with the new Labor government to close the loophole. And on the other side of that, of course, Foxtel opposes the laws entirely and wants them overhauled so it can bid more effectively for sport. So no surprise there that Foxtel wants them completely scrapped. Seven West Media wants them to close the loophole to prevent streaming services from putting a paywall in front of things like the AFL. So that's what's going on at the moment. And obviously kind of this news story is building up in relation to the change in government that happened in Australia. I don't think we spoke about it, but of course this happened a couple of weeks ago from the Liberal Party, who receive a lot of donations from News Corp and Foxtel, to now the Labor Party, who may be less... a little bit more unbiased on a topic like this. So now they're speaking up about it and trying to get this law kind of pushed through. So
it's interesting. I wonder if because Fox owns COO, which is a streaming service.
Yes.
Wonder if they could do something where they spin COO into its own company, which is owned by Fox, and then COO can bid in the same way that a YouTube or a Netflix or something could bid.
Yeah, well,
would that be possible? Do you get what I'm saying?
Yeah, well, KO's owned by Foxtel, so any of the rights that Foxtel has kind of apply over to KO as well. But that's actually a good point. I guess could they, instead of Foxtel bidding for the scraps, could KO bid for the entire rights? Limited. Yeah. But which is interesting because then you would think that Foxtel, well, I guess they would still oppose the law, but they would be happy that there's kind of a loophole that exists.
Yeah, because they would be able to take advantage of the loophole as well. And then they could just do some like made up like content licensing arrangement between Foxtel and KO where they can just display each other's content for free kind of thing.
Yeah. They probably could do something like that. I don't know. So I'm curious, do you have any thoughts on the situation or just the laws in general?
I just find it very interesting because I didn't know that there were these anti-siphoning laws to begin with, but I guess it does make sense. Honestly, I've never paid, I love these sports, but I've never paid too much attention to how the rights are acquired and how long the contracts last and that sort of thing.
Yeah.
I mean, I hope that there's always an element of free to air, like, for example, a big part of my childhood and a lot of memories from my childhood is watching, because we never had any sort of pay TV. And I imagine most Australians don't have pay TV.
Yeah, neither did we.
Foxtel was like, I don't know if it's still the same now, but when I was a kid, you would really have to pay a lot of money per month to have Foxtel. We're talking like 60, 70, some, depending on what plan you got, like $100 a month just to have Foxtel. And that's in money, 20 years ago, Australian dollars, kind of thing. And a lot of my memories from my childhood, and a lot of the reason that I got into a lot of sports is because I was able to watch it every weekend on free-to-air TV. I could watch some AFL, I could watch the cricket, and I got really into those sports, and I ended up playing those sports for basically my whole childhood. So in that sense, I kind of do hope, I kind of like the laws that there is protection. There's always going to be some sort of sport, because I don't know how, if you're watching internationally, I don't know how sport kind of fits in with your country's culture. But I do think that they're a large part of, an element of the Australian culture. Of course, I don't want to just say that Australian culture is sport.
Everyone loves sport. You're an Australian if you don't watch the footy.
forget Australian, history or Indigenous. No, it's just sport, mate. It's just no. So there's a very small section of Australian culture that's sport, but I think it is quite an important piece. I hope this kind of stays. But then again, there's kind of the capitalist mentality in me that it's kind of like, well, it's up for grabs, he with the highest bid takes the chocolates kind of thing. But I don't know. Because I think I think that Netflix was thinking about acquiring the broadcast, like the rights to Formula One, weren't they? They wanted to, because they've got that super successful Netflix series. I think they just wanted to be like, nah, we'll just take the whole bloody sport,
Yeah,
but
I hadn't heard anything of that,
ago.
But that's probably true. That wouldn't
telling porkies here.
I mean, that wouldn't surprise me. So it's definitely possible. I definitely agree with you. I think that I don't know. I don't mind the law. I think certainly they should still try and keep sports at least as a priority first on free to air. I think it's a good law given our, like you said, given our culture. One thing I would like to see though is if they close the loophole, then they should also change the law from just giving broadcast TV networks priority to giving any free-to-air broadcast priority. So in other words, if YouTube wanted to make a bid and run it for free on YouTube with ads, they should also be in that priority slot to bid. Right. So that it's still free, but it's not this kind of, you have to be a legacy TV network, which is clearly on the way out anyway. I think they should allow for that. And I think that makes sense. I don't think that will be put in as a consideration if they overhaul this law. I think they'll just close the loophole and it will benefit the broadcast television networks that continue to get priority.
Probably. But it's quite political, I feel, as well.
Yeah, but I certainly think we're heading in that direction where businesses like YouTube, whether it's for free or for paid, where we will be watching sports, you won't be able to just flick on your telly. You'll be going to the YouTube app, or you'll be going to the Netflix app or the KO app, right? Or whatever it is. I definitely see that happening more and more in the future. So, but that would be really fascinating if the AFL was just completely on YouTube and you had to have YouTube Premium. If it was under a paywall, I think that would be disappointing because I think most people would stop watching AFL, and that kind of sucks.
Yeah. I don't mind where it's hosted, but I agree. I just think that it shouldn't be any sort of ad-supported free content. Yeah, that's fine by me. I just don't want to be able to watch any AFL. It's behind a paywall somewhere. That would be a real shame.
Yeah.
All right. Is that all we got to talk about for that?
That's all we've got. So we'll see how that kind of unfolds. But there's no plans for the government to overhaul this law. So this is a plea from Seven West.
Please help us.
Yeah.
You want to talk about OpenSea, the NFT insider, or you want to talk about Elon Musk first?
You pick. You pick.
Oh, I pick. Let's talk about Elon Musk because this is quite relevant to kind of everybody at the moment. And sorry if you're an international viewer and that talk about AFL and cricket and that is just like not particularly relevant to you. But this could be Elon Musk's ultimatum to Tesla staff, quote, return to the office or leave.
Yeah, it's a bit harsh.
I love it how they always have to say the world's richest man. As soon as it's net, they have to play on the fact like he's a billionaire. You hate billionaires, remember?
Yeah, he's evil.
They're bad people. Yeah, they always have to play.
He stepped on people to get there.
Yeah. But anyway, the world's richest man has had it with this whole working from home business. Tesla Chief Executive Officer Elon Musk sent an email late Tuesday to everybody at his electric car company, elaborating on an earlier missive to executive staff about the need to be in the office. Employees at numerous companies used to working from home or hybrid policies have revolted against RTO or return to office policies and long commutes. So this is actually quite interesting, and I'm interested to hear your perspective on this as well. So there's two emails that Elon sent. The first one was just to executives. Okay, so just very high up. Management. He said, anyone who wishes to do remote work must be in the office for a minimum, and I mean minimum, of 40 hours per week or depart Tesla. This is less than we ask of factory workers. If there are particularly exceptional contributors for whom this is impossible, I will review and approve those exceptions directly. Moreover, the office must be a main Tesla office, not a remote branch unrelated to the job duties. For example, being responsible for Fremont factory human relations, but having your office be in another state. So that was his first email. So clearly somebody's ticked him off.
Yeah, that's
probably not pulling their weight somewhere along the chain, and he's just been like immediately cracked down on this.
Yeah. Yeah, I don't know. It's going to be a tough one. People deciding whether, or businesses deciding whether they want people to continue to work at home, because I think a lot of people love working from home. There's much more flexibility, and you can kind of choose your hours a little bit better. And for some people, they work better at home, and for some people, they won't, of course. But I think from a business perspective, I can definitely understand wanting people back in the office, because it's just easier to see what people are doing.
More effective. Yeah. So anyway, that was his first email. Then he sends a follow-up email to everybody, company-wide email, not just executive staff. He says, everyone at Tesla is required to spend a minimum 40 hours per week in the office. Moreover, the office must be where your actual colleagues are located, not some remote pseudo office. So kind of the same thing. If you don't show up, we will assume you have resigned.
Yeah, that's a bit harsh, I think. The phrasing of that.
Isn't it? The more senior you are, the more visible must be your presence. That is why I lived on the factory floor so much, so that those on the line could see me working alongside them. If I had not done that, Tesla would long ago have gone bankrupt. Sorry, my voice is really fading today. There are, of course, companies that don't require this, but when was the last time they shipped a great new product? It's been a while. Oof, sick burn. Tesla has and will create and actually manufacture the most exciting and meaningful products of any company on earth. This will not happen by phoning it in.
Yeah.
Thanks, Elon. So, fighting words. He also followed up on Twitter. So, Omar from Holmar's blog said, hey, Elon, a lot of people are talking about this leaked email. Any additional comment to people who think coming into work is an antiquated concept? He said, quote, they should pretend to work somewhere else. So
That's great.
here's my thought. I mean, I can kind of understand where he's coming from, because what you're saying before, when people are at home, sure, it's nice, but you're sitting in your living room. There's no one directly watching over you. And I've seen just from my friends that just work jobs that when they work from home, they're kind of like come back in 5 minutes, wiggle the mouse so that your computer stays active, that kind of stuff. So, I do think that overall less gets done when you work from home. And I think that it's fair in Tesla's case because they make products. Like that's their, like they make products. They're not just, for somebody like me or for you, all of our work can be done at home. We're just filming videos, editing videos that can be done at home. But if we were, say, making video cameras, we couldn't make a video camera in our house.
Yeah, that's a good point.
So I can understand, like, Tesla, they're creating things, they're making products, shipping products, doing all that. So I understand that they want everybody to go to the office because a lot of the time, like, Tesla's head office is actually in the Texas Gigafactory. So I can understand that because, a lot of those positions in Tesla wouldn't be able to be 100% done just from working home, or they would be much less effective if they tried to do a lot of it from home. Yeah. So I can understand that. And I'm always a big fan of, people being together. And I actually don't mind working in an office. I like there being a separation between work and home, and everybody that's working is in the same place in person at the same time. I think it's much more effective that way.
Yeah. It is kind of easier.
But what are your thoughts?
I think it kind of is easier to get stuff done when you're kind of in an office. And I have I think there's nothing wrong with Musk wanting his employees to do things a certain way. I mean, they're a company that's growing so quickly, so they have to execute. And everyone knows what Musk is like. So I think it's completely reasonable. And if you don't want to work in those conditions, it's not like people are forcing you to work for a particular company. And it's not like it's the worst. It's not like they're actually bad conditions. It's just different to how other businesses will go about it, which is to allow people to stay at home. But I think it also just depends on the person as well. Like some people can work from home and they can motivate themselves and get things done, even though there's maybe more distractions and less people watching over you. I've seen it. I've seen people working from home and they'll have an 8-hour day, and the 8-hour day at work gets spread out into 8 hours because you have to be there. Whereas when you're working at home, maybe that's like actually 5.5 hours of work, and they can smash it out, and then they have more free time.
That's like you and me.
They're more effective.
If we're working at home, sure, we've got a 9 to 5. If I'm in the office, I'm there from 9 to 5 or whatever. But it's like, man, if I'm just at home and I know I've got to get this, I can stop when the work is done. Then it's like, let's go.
Yes.
Let's get the work done.
Yeah. Yeah, exactly. There's no one saying like, oh, why are you clocking out early? Which is a good thing and a bad thing. It means, of course, if you don't get the work done, no one's going to tell you that you haven't, you're not doing good enough. But it also means that, if you want to be more, you can be more effective. The structure of having to be at work for a certain amount of time rather than getting certain tasks done is kind of flawed in that people are less people are less effective because they have to be there for the length of time. That I think there's positive and negatives to both. It depends on the particular job, I think, and maybe a combination of home and in office or completely in office is probably appropriate for most things, so that you can still meet up with your team members and collaborate. But it's Musk's business. He can dictate whatever he wants. It's not a democracy. So if he wants it to be that way, you don't have to work there.
Are you surprised this story was picked up by the media?
Very surprised. So weird. Like, it's just Elon Musk. Like, who cares what that guy thinks, Like,
the world's richest man, and he said something that could be construed as him being a nasty boss.
Yeah. Imagine that.
Let's run with that. But yeah, there you go. So that is what Elon Musk got up to during the week. There must have just been something that ticked him off that made him just be like, nope, that's it. I'm writing this email to everybody. There must be he must have found someone that's just like really slacking off.
Yeah. Yeah, there was just one guy that's caused this.
And he's just been like, ah! But anyway.
That's great.
What should we talk about next?
Let's talk about, I've just got a little one around Meta platforms. So Meta Platforms, previously Facebook. The chief operating officer has stepped down. So Mark Zuckerberg's Sheryl's gone. Sheryl Sandberg is stepping down from Facebook, from Meta Platforms. She joined Facebook in 2008. So she's been there for 14 years as Mark Zuckerberg's number 2. So
she's always there. Every conference call, she's always there. It's like, Mark Zuckerberg and Sheryl Sandberg is like, they're the two that are always there kind of thing.
Yeah. So, relatively big news, I think, out of Meta. She's going to remain on the board. I would imagine I haven't actually looked this up. I meant to, but I would imagine she's a considerable shareholder in the company. So, makes sense. She's going to remain on the board as a representative of the shareholders. And now we don't know whether she is leaving for personal reasons or otherwise. Some people have kind of rumored that she has political aspirations. I think she's done quite a lot. She runs committees and does quite a lot for women in work. So she kind of advocates for that. So potentially she's got political aspirations to move into, but who knows? That's just kind of speculation. In terms of her replacement, how do you pronounce his first name? Xavier?
Hang on, where are you?
Javier?
I think it's Javier.
Javier. Okay, yeah. I'm terrible with names that don't pronounce like the way that they're written. What did you say? Javier. Javier Olivan is the current chief growth officer who will be taking over her role. He joined Facebook in 2007, so her replacement has also kind of been at the company for an extremely long period of time. And his role has been to essentially to scale their user base, which at the time was 40 million users. So I think he's done a pretty good job over the past few years of scaling Facebook's their user base. Which makes sense why he's getting the call up. His team was also responsible for steering Facebook towards acquiring Snap2, which was an Israeli startup created a stripped down version of Facebook that could run on older phones and doesn't require high-speed internet. That tech eventually became Facebook Lite. And as of 2017, it has 200 million users in countries like Vietnam, Bangladesh, and Nigeria. So, who knew?
That's quite cool.
I didn't even know Facebook Lite was a thing, I'm going to be honest. But it makes sense.
There you go.
So, yeah. So, he's done a lot for the company, and he'll be taking over that position. So there you go. Another leadership change. There was another change a couple months ago, I think, in Facebook's board of directors or the management team. I can't remember exactly what it was, but a little bit of chop and change. But that kind of makes sense, I guess, as well, with the change in trajectory for the business from being a strict advertising business to now this massive focus on the metaverse. Kind of makes sense, I think, that maybe there's going to be some changes in the management team to align those values.
Yeah, there you go. I don't think I have much to add on that. I imagine Sheryl Sandberg would have been responsible for a fair chunk of returns for investors over the years. So she's probably more than done her job.
Yeah,
I would say.
Yeah, I think that's fair to say. Yeah, I mean, look, anyone like top 3 or 4, people at Facebook, obviously they've all worked extremely hard to build the business it is today, and it is mind blowing what they were able to do. Over the course.
I think honestly, years. Like with Facebook, I do my voice. Excuse me. Like there's so much drama, privacy stuff, and whatever, and mistakes have been made. But I think if I just look like overall, what is like some of the most beneficial for humanity companies that have I think that like Facebook is up there, just having those messaging social media systems to be able to communicate with people. I mean, you think about before Facebook existed, I mean, there was really nothing. And that they pioneered the whole social media industry. Yeah. And I'm making a video about Facebook now, and it's just crazy. Like it's crazy how they just had an amazing product service, whatever you want to call it, and how quickly it took off because it was just so useful. It's like I was looking at the timeline between like 2004 which I think is when it was founded by Mark, and like 2005, 2006, 2007, 2008. And it was crazy. I wonder if I have that here. I probably don't. Maybe. Let's have a look. Sorry, this is a lot of dead air going on here.
That's all right. Well, I mean, even in this article I was reading, by 2007, so 3 years after it was founded, they were at 40 million users, which is, that's an insane amount of users to gain in just 3 years from scratch. So, it was
within a month, more than half. Because remember, it started just for Harvard, just within Harvard. Yeah. It was a way to connect people that went to Harvard. So within a month, more than half of the Harvard undergraduates had registered. So even that is like a smashing success if you just left it at that.
Yeah.
By the end of 2004, so the same year it was founded, Facebook had over 1 million users. And then fast forward. In 2010, the platform passed 500 million users. So what's that? It's like 6 years later.
Yeah, that's
just
crazy.
Insane. And now they've got
2.7
daily active people, monthly active people. Yeah. Or is it daily?
Daily is like 3.6.
No. The higher number would be monthly because it's easier.
Oh, sorry.
It's easier to be a monthly.
Yeah.
It's harder to be a daily.
Yeah. Yeah, wow.
But yeah, honestly, Facebook, wow. I mean, you can give them, you can hit them hard with tough questions over privacy and whatever, but overall, if you just really zoom out, it's just incredible how the business has grown over time.
Yeah.
Because it filled a need. It had a gap in the market and it was just a good product, service.
Yeah.
It's just good.
Anyway. Yeah, what they've done for businesses as well is just incredible. Either small
That's
businesses
the other part of it,
being able to build a business online through Instagram or Facebook, and then just also the advertising front for even brick and mortar businesses that would previously maybe not advertise at all. There's suddenly this relatively simple framework for running online advertisements. Especially for businesses like plumbing businesses and that sort of thing, being able to get high value clients very easily through that method is an incredible feature that was gatekept by the big media companies for so long. So, yeah, incredible business.
All right, shall we talk about this insider trading?
Yes, talk us through it.
It's actually quite interesting. So former OpenSea product manager Nathaniel Chastain has been charged with wire fraud and money laundering in connection with an insider trading scheme. Chastain was arrested Wednesday morning in New York City and is expected to be presented in court later today. I'm not sure when this article was actually released. Chastain was publicly accused of insider trading in September and fired from his position at OpenSea, but today's indictment marks the first criminal charges associated with the scheme. I actually find that funny, that the whole reason that this became a thing in the first place is because it's NFT insider trading. So it's an open ledger. It's the blockchain. So people actually, because everybody can see.
We can see.
They went back and they said, no, we can see you, like it's there. It's right here on I can see you doing this.
Yeah, it's just a matter of proving that the wallet that the money left or went to was associated with that person rather than having to prove a bunch of other things, I guess. So very interesting.
The public actually clued in that this was occurring, and then it went, I think, to the FBI. So while employed at OpenSea, Chastain was responsible for deciding which NFT collections would be featured on OpenSea's front page, a distinction that typically made the collections skyrocket in value. So if you get on the homepage, then your NFTs they're worth a lot. If you don't make it to the homepage, then they're not worth so much. And this guy was one of the people that decided what they're going to put on the front page. So So the indictment describes a pattern of 45 token purchases on 11 different occasions. In each case, Chastain purchased NFTs shortly before they featured on OpenSea's homepage, sometimes only a matter of minutes before. According to prosecutors, Chastain sold the tokens for between 2 and 5 times his purchase price. OpenSea soon fired Chastain after they determined the allegations were legitimate, though Chastain has continued to be active in the NFT community, especially on Twitter. The startup has noted that it didn't have specific policies in place prohibiting this type of behavior beforehand, but has since enacted new employee rules.
I mean, do you really need specific policies if it's illegal?
Exactly. Our code of conduct doesn't say don't murder people.
Yeah. Don't kill anyone in the office. We need to update that.
And by the way, be respectful, don't be racist, and also don't kill people. Updated terms and conditions, updated policies and whatever.
It is very funny though, because it is kind of, crypto is still the Wild West. So like you have, and it's very young person oriented. So there's obviously people who are doing things intentionally, and I'm sure this guy knows what he was doing. But there's also, I've seen a lot of people talking about certain things and they don't know that they're describing a Ponzi scheme or a pyramid scheme, or they're describing insider trading or tax evasion. Like people saying, oh, you can do this with crypto and you don't have to pay tax. It's like, that's tax evasion. You can't do that. So it's
Did
very
you see that
interesting
CoffeeZilla video?
I don't know which one.
Oh, it's the one where he picks apart a guy that's like talking about this new cryptocurrency. Or something like that. I'd have to check for sure. But the guy is being interviewed, and in the interview, he ends up exactly describing a Ponzi scheme. But he doesn't even realize.
No, he doesn't even know that's what it is.
No, he doesn't even realize that's what it is.
That's what I mean. It's like it's this weird like new market that is like very Wild West. So there are going to be people who are taking advantage of it, but it also seems like there's a lot of people who just have no idea what the hell they're doing. Maybe it's people who like got in on crypto really early and they're now mega rich because of it, because there are some people who've done that, and now they're just this business person in crypto who really has no business being involved in a business, or at least at the top of a business. So it is it's very fascinating. I think we spoke about this story maybe back in whenever you said it was September when this first came out, because I remember hearing about this, or maybe CoffeeZilla did a video on it or something back then.
Right.
But fascinating. I mean, it's the most blatant version of insider trading. It was like, buy, list on the front page, stock price goes or NFT price goes up, sell. And it's all there. It's all there on the ledger. So it's pretty mind-blowing. I'm sure OpenSea is probably helping in the investigation. I would imagine. I don't know.
I'd imagine so. It does say here, so US Attorney Damian Williams said in a press release, quote, NFTs might be new, but this type of criminal scheme is not. As alleged, Nathaniel Chastain betrayed OpenSea by using its confidential business information to make money for himself. Today's charges demonstrate the commitment of this office to stamping out insider trading, whether it occurs in the stock market or on the blockchain. So that's the quote there. And then it says, as a part of the indictment, Chastain is required to forfeit any money that can be traced to the proceeds of the scheme. Well, that just makes sense. The investigation was led by the FBI's National Cryptocurrency Enforcement Team, apparently without the involvement of the Securities and Exchange Commission, which typically takes the lead on insider trading cases. The SEC recently doubled its cryptocurrency enforcement staffing, citing an abundance of fraud in the market.
Oh, good for the SEC. So, they've got 2 people working in that.
They've that now. 2 people now instead of 1. The one that was working there, he needed a secretary. So they decided to give the team 1 more person.
Yeah, I don't know what the SEC is doing on this. Not much, I mean, and the FBI, because there are so many. If you watch CoffeeZilla, which we've mentioned him a bunch of times now, he's getting a big promo here, but he does some great investigations into some fraud and scams that happen through crypto.
Absolutely.
And there's so much evidence. The evidence is overwhelming. He's got like interviews with staff. He's got screenshots of messages from the person. He's got crypto wallets all networked together to show this is a wallet he definitely owns. Like the evidence is there beyond a reasonable doubt, beyond a shadow of a doubt. And no one, and Coffee even said himself that he sends this stuff to the SEC. Like he sends it to them. Like, here,
really?
I've done the work for you, and they don't do anything about it, which is mind blowing. So that's why I say they've only got one guy there, because
fruit you've ever seen.
Yeah. I mean, how bad is your office if you literally get sent all the evidence on a silver platter and you can't go after them? It's mind blowing, like how poorly regulated it is, and how much, like, if you had to pick one area where the majority of financial scam is going on at the moment, it's cryptocurrency. Like there's just 100%. No question about it. It's just
no question.
There are so many. It's mind blowing.
It's like every second thing in crypto at the moment is a scam of some description.
Yeah, it really feels like when you watch The Wolf of Wall Street about the brokers in the 80s, like and them, buying a bunch of stock in a company and then pitching it to all of their clients so that it would drive the stock. Like that's that kind of wild west of finance is what's going on in crypto at the moment. So yeah, I think in 20 years we'll probably have some movies about the crypto market.
Yeah, honestly, you're probably not wrong, because there's just so much. It's Wild West,
Yeah.
There you go.
Anything else from that story, or that's pretty much it?
Nah, that's pretty much it. Yeah.
All right, let's talk about.
What should we talk about?
Yeah, I got one more story here. Just a small one from Jamie Dimon, who is the CEO and chair of JP Morgan Chase, I believe. I hope I got that right.
Yeah.
And he's been talking a little bit about, he was speaking at a finance conference this week, and he was kind of talking about the economy. He said, I said there's a storm, let me try that again. On Wednesday, cut. No. On Wednesday, he said, I said there's storm clouds, but I'm going to change it. It's a hurricane. So just to give some context to that, just a week ago, he essentially came out and said that the economy is strong, but there's big storm clouds over. Now he's saying, no, it's not just storm clouds, it's a hurricane. So he's within a week kind of changed his tune pretty significantly on his opinion on what he sees happening in the markets or in the economy. He said, right now, it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. The hurricane is right out there down the road coming our way. So it's pretty pretty dark.
Wait, is this Jamie Dimon or Michael Burry?
Yeah. Genuinely, that's what it sounds like. All he had to do was like speak in some kind of weird code. And then it would be Michael Burry.
Post a link to a YouTube video, and the YouTube video is like, the sky is falling down.
Yeah, what the hell did he post? He posted something today that was really cryptic. I can't.
Did he?
I need someone to translate his tweets for me, because he's
he's gone to next level. I can't keep up with him anymore.
Yeah, he's right at the bottom of that meme where they have like the different like I don't know how to describe it. Trying to describe a meme here.
Is this like the different like brain state levels?
Yes, that's a good way to describe it. Yeah. He's like right at the bottom now, and I have no idea what the hell he's talking about at the moment. But yeah, Dimon, he spoke about really two key factors that he sees concerning. The first is, of course, the Fed's quantitative tightening, which we spoke about last week, up to 95 billion per month, which will be done by the end of August. That actually started in June. So what are we at, the 1st or 2nd of June at the moment? So, or at least in the first week of June. So quantitative tightening has begun.
There you go.
And what did he say? He said, we've never had QT like this. So you're looking at something that could be writing history books on for 50 years. So that's a kind of a big statement on that.
Yeah, I don't pretend to know what like size of tightening or like what size of interest rate hikes will actually do for inflation and that sort of thing. But we'll have to see what happens, because this is. I think Warren and Charlie say it's the most interesting time in economics they've ever seen.
Yeah, it'll be fascinating because I mean you've seen interest rates on government bonds, for example, rise quite considerably while the Fed was still buying them. So even though the Fed was buying government bonds, the prices of those bonds were falling. So now the Fed is going to be selling government bonds as well, with everyone else who was already selling government bonds, driving yields up. So it'll be interesting to see whether there's an acceleration in the rate at which, say, the 10-year bond rises, the yield rises and the price declines. Yeah. So we'll see kind of how that plays out. And the other factor he spoke about was the Ukraine war. He said wars go bad, they go south in unintended consequences. We are not taking proper actions to protect Europe from what's going to happen to oil in the short run. And then he went on to say that he thinks oil prices could rise from the current $115 a barrel to about 150 to 175 a barrel. So he thinks that oil is just going to continue to surge upward, and that's not going to help inflation if that does end up happening. But of course, it's just one man's opinion. And then the only other thing related to that I saw was the Fed put out a report today that said they've seen slight or modest economic growth in April and May. April and May being the first 2 months of the second quarter, which we're kind of watching carefully, because if there's another negative GDP quarter, it will be a recession in the US. So they've come out and said, look, there's slight and modest growth. So they're saying there's growth. So depending on what happens in June, we'll see what the outcome is. They may as
well just come out and say, look, guys, we're probably not going to have a recession, so you won't be able to write those articles. You won't be able to use that word, which I just want to make things clear. That R word, don't say it, because it probably isn't going to happen.
Yeah.
It's like Jerome Powell the whole time has just been trying to be like, no, guys, let's just relax, everybody. It's fine.
Everything's all fine.
Don't say recession. Don't say inflation. It's transitory. But anyway.
Oh, dear.
Yeah, there you go. I don't know if I have anything more to add to that.
No, I don't.
But interesting. I don't know too much about Jamie Dimon, to be honest. I know he's well respected. And he's a voice to kind of listen to, but I don't actually know too much about him. But I mean, if he's on the inside of JP Morgan Chase, I mean, he's got to know.
Yeah,
he's got to know a fair bit, right?
He has to have a fairly reasonable take on macro. For their business, but
to run that business properly.
Yeah. But very, very, as you said, a very interesting economic situation as it continues to develop. That's all I had for that story.
Okay, Q&A. Should we do a couple of Q&A questions?
Yeah, we did that one last week.
So I was trying to delete it, but my keyboard turned off. Okay, I'll ask you this one. This one's pretty interesting. So say if you're mainly a passive investor and you have 75% of your capital in various ETFs that track the global, the Australian, the USA markets widely, and then you have another 25% in individual businesses, and then you have one business that you've invested in that goes up over 100%. Like, hang on. You invest in one. Okay, so he essentially is saying one business absolutely skyrockets. Mm-hmm. Should I take those profits because it may now be overvalued as we're seeing new records of inflation and interest rate hikes?
Yeah, that's an interesting question. First of all, I think you shouldn't take into consideration. I think you should kind of try and not be biased by predictions about what interest rates and inflation are going to do, even though it's continuing to get worse. We went through a long period where inflation was really, really low, and then all of a sudden it surged. So I think just try and not be, what's it called, like a short-term bias, or I don't know exactly what the word for it is, but
I don't know, like bias towards current events.
Yeah, where people believe what's happened in the recent history because of our strong memory and our relative to long-term memory. Don't try and let that bias you in your decision making. But when it comes to whether a business you should sell something that's potentially overvalued, I tend to, it depends, I think. I tend to hold the view that I want to hold on to great companies. So if it's still an amazing company and it's not astronomically overvalued based on your models, then I would probably tend to hold on to it. Maybe I would even hold on to it if it was astronomically overvalued. But it also depends on how you've gone about doing value. So for me, I'm very, very conservative when I estimate value. So as a result, my models would show that a business is overvalued when it's kind of even just above my very conservative models, meaning in reality, it might not actually be overvalued. It's just higher than my very, very safe conservative models. So in that case, you don't want to be chopping, you don't want to be cutting the flowers, right? In that circumstance. If you have a really conservative, safe valuation, then being slightly overvalued or going into that territory may just mean that the business is performing great, which shouldn't really be surprising if it's in your portfolio. So that's kind of my take on selling businesses at the moment.
Yeah, I'm in the same boat as you. I don't think you necessarily have to sell something. I think I always come back to the two different things when we talk about stuff like this. It's definitely okay if you think that this business has gone up a lot and it's like wildly overvalued and you just want to lock in profits. I don't think there's anything wrong with that. I think you do have to be careful, and the biggest mistake that I've made and that I've heard the big investors they write about in their books and stuff is cutting the flowers, like selling too early along this broader 10-year journey that you want to go on with this company. So I definitely think about that. Obviously, we can't advise you what to do or anything like that, but I think about, do you still anticipate, even at the price they're at now, in the next 10 years, because we're long-term investors, so over the next 10 years, do you think that the business will continue its growth trajectory and will go on to higher valuation, or is it just like so highly valued that you're just like, nah, it doesn't make sense. I'll lock in this profit because this is just crazy. Yeah. But yeah, I would echo what you're just talking about with not getting trapped into the short, like what's going to happen over the next 2 or 3 years, because we want to be in this for the long term. I think we want to be here in 10, 15 years. And honestly, there are some businesses that will still perform very well, even if all hell breaks loose, interest rates go just through the roof, inflation just, keeps cracking on regardless, and all of these macro things that we're worried about, recessions are going on. There are still some businesses that will perform very, very well. I mean, a lot of businesses probably won't perform very well, but maybe you've got the one, maybe you've done the research, you found the one that has absolutely no debt, has a whole lot of cash, their growth plans are uninterrupted, they've got a great moat, so they've got a great product that people can't get away from regardless of economic conditions. Maybe in that case, this business keeps cracking on,
Yeah. I just remembered one other thing that I wanted to add on that. The only kind of exception to that would be if you're fully invested, which you probably want to try and be fully invested as much as possible. And there is one extreme, relatively speaking, there's a far, far, far better opportunity. Then in that circumstance, I would probably sell the overvalued one and move it into the other one. But you want to be careful not selling one that looks slightly overvalued for one that's slightly undervalued, because you really can't know if you've done your valuation fairly across both of them. It would only be if there was a massive discrepancy. One in your portfolio is massively overvalued and the other one that you want to own is extremely, extremely cheap. So that was just the only other thing I would add. All right, I'll ask the next question. Should I ask this one to you?
Yep, go for it.
I think the market fundamentally undervalues tech companies historically. You can't delete stuff while I'm reading the question. It moves it.
Sorry.
No, it's all right. I'll stop. I think the market fundamentally undervalues tech companies historically, not necessarily in the last 1 to 2 years, but think it has somewhat mean reverted recently. I've been playing around with the idea of a barbell portfolio of a percentage of net worth, so that say 50% is cash and 50% is leaps across a range of tech companies. Google less risky, and then say an Archimoto or Pubmatic or something very high risk. Thoughts?
Yeah, this sounds complicated. I don't think I don't play around with options, so I'm probably not actually the best person to ask about this.
Maybe. But I think just explain maybe what leaps.
So leaps,
are.
leaps. It's a long-term equity anticipation securities. So I looked this up, or I got a definition before. Refers to publicly traded options contracts with expiration dates that are longer than 1 year, and typically up to 3 years from issue. So you might run with this hypothesis, and maybe it's true. I honestly don't know. Market fundamentally undervalues tech companies. So maybe not in the last couple of years, but overall they generally are. So what I'll do is I'll find some tech companies and I'll just buy maybe a broad range of essentially long-term call options, I would imagine, and just anticipate that over, say, 3 years, let's say I've got these long-term options, call options, that the price will be higher in 3 years than what it is today. And maybe you've constructed some sort of idea where if you have a diversified basket of tech companies, maybe the idea is that you get maybe 60-40, and if you get 60-40, then you've made a whole bunch of profit or something like that. I just wouldn't know. I just wouldn't know if I could execute that correctly. And I also, one of the key things that comes to mind is I just don't know whether I could have, if I was buying these long-term options, 3 years or whatever, I don't know if a thesis I have about a tech company could play out, because tech is generally very volatile. Has been for quite a while. It's been very volatile. So I don't know if in 3 years' time, the thesis that I have about this up-and-coming tech company could have played out, or even an established tech. Because I feel like, although 3 years sounds like it's still a long way away, I feel like 3 years is still not enough time for me to be quite confident. Like, maybe give me between 5 and 10 years, I'd feel more confident that the thesis might play out. And if I bought a long-term call option, or if I invest in the company, it might pay off. But
yeah,
I don't know if I'd be confident in 3 years.
No.
But honestly, the listener that wrote in this question probably knows a lot more about this kind of strategy than I do, because I've never dabbled in options before or leaps before, so maybe I'm missing something. That's very often the case.
Yeah,
but that's kind of my thinking broadly.
Yeah, this is certainly something I don't mess around with, and I just agree with you that 3 years is just not long enough, I think. Certainly if you look over the last 5 years, every time there's been a crash, it has recovered within the 1 year. So again, there's this kind of recency bias of how markets have reacted after pain. But you go back to the recession prior to that, or let's say the 2000 recession, and markets were flat for I think 10 years or something like that. Like, it was a very long period of time. I think from 2000 until must have been about 2010. I think markets were.
Yeah, GFC, it took 6.5 years or 5.5 years, I think, as well.
Yeah, and the tech one before that was worse. These are long periods of time. And on an individual basis, it plays out differently. I think Microsoft was negative for 17 years, which is an astounding amount of time. And I know Microsoft was an outlier, swept up kind of into the tech bubble. But
case study.
We're talking about numbers, 10, 15 years of potentially a period where, if there's a really devastating recession, of how long the market takes to recover. So 3 years is just not enough for me. Even for me, 5. I don't make, a lot of people, their analysis is a 5-year horizon. I'm always a 10. And really, I'm looking at 10 plus businesses that have potential beyond 10. That there's a lot of expansion that they can do over many years. So yeah, for me, 3's a little bit short. And of course, there's the risk that you're taking with the leaps or the stock options is that you don't actually own the underlying equity. So if you're wrong, you just lose the money you've invested. There's no kind of reconciliation for that. So that's not something I would be wanting to speculate on.
Yep.
All right.
Fair. Done.
We'll wrap it up there. We've been going for a little bit over an hour, I think. So we'll leave it there for today. Thanks everyone for tuning in. As always, if you have any other questions, feel free to go over to the YouTube version of the podcast and see our beautiful faces and leave your question there if you want a question answered on the next episode. Thanks, Brandon, for joining me. As always, thanks to Sharesight, more important than Brandon, for sponsoring today's episode.
Yes, thank you, Sharesight.
Sharesight.com. Sharesight's the real co-host of
real MVP,
the Young Investors podcast. So yeah, shout out to them.
They keep the lights on. I don't.
No, there we go. You carry the podcast. I'm just I'm kind of like a second chair here. So,
mate, I think it's the other way around.
No, absolutely not. Don't be ridiculous.
No, you hang up. No, you hang up.
No, you end the podcast.
Let's get out of here before it turns into too much of a bromance over here.
All right. See you later, guys. Have a good weekend.
Bye-bye.